Okay, so good afternoon, guys. We'll start off. Let me share my screen. Okay, I hope my screen is visible.
Yes,
Yes.
Akash.
Okay, so let's start off. So this webinar was supposed to be a topic of stop loss, why it is important, and where should we keep everything, our stop losses and all. But I would also like to add some more to this. So let me discuss a very basic setup. Say if we divide an uptrend structure or a downtrend structure into different parts, for an uptrend structure, we need this kind of a movement as a first part, this movement as a second part, and this movement as a third part. So wherever we see an uptrend, we will always see a first part, a second part, and a third part. Similarly, for a downtrend, this will become a first part, a second part, and the third part. This is one of the most simplest structure that we can discuss and we can trade or invest on, which is very powerful and very simple. Nothing much to do. So what is the exact plan of this setup or a structure? Say if you see something like this, a red candle, if you see a structure like this is not an uptrend. Why this is not an uptrend? Because what we just discussed, this has to be our first part. A rising price has to be our first part, but here we can see a falling price. So this cannot be an uptrend. How an uptrend will look? It will look something like this. It will look something like this. Then we can say, okay, this was our first part where the price rose, a second part, and our third part, right? I'm not saying that we cannot buy in this structure. This is called a reversal structure. We will discuss about it later on, but this is our uptrend structure. Similarly, for the downtrend, the first part has to be a down, and then you can say upside, and then a down. This is a downtrend structure, right? So if we try to make a setup on trading or investing, I'm not talking about short selling, only investing. The moment you see this first part somewhere, and then you see a second part like this, how much candles are here? 4, 1, 2, 3, 10. That doesn't matter as of now. We are just focusing on the overall structure, how it is looking. And you see this, the most prominent points that we need to understand is that how many be these candles? 4, 5, 6, 7, 8, 9, 10. This low should not be broken. The first part low should not be broken, and then this should continue. So generally, what is our setup? The moment there are two kind of entries possible here. I will discuss this over chart also. The moment you see a candle forming like this, say this candle has not completed yet. Say this is a monthly candle. Still 15 days to go for this month to end. So in this 15 days, anything can happen. Either this candle can go more upside or more downside. But the moment you see that this is the first part, this was the second part, and from here it is again trying to go up, almost equivalent to this first part, you can directly enter here and keep your stop loss below this point here. And what we can expect, or what do we speculate, that since in an uptrend we know that the price moves like this, it breaks this area and moves like this, so we expect that okay, after this part it can break and then go upside. This is the first kind of an entry. Second kind of an entry is, again we take this same candle and we wait for another 15 days that was left. So after the closing of this candle, closing means this candle is done, 1 month is completed. Now we are totally sure that okay, the stock has broken this point, from here it should move on. Then you enter here. There are two kinds of entry possible. Either you enter using some speculation that okay, from here I see a very good probability that okay, it is forming this structure and now it will go up, or you wait for the closing. What are the pros and cons? The cons are that if you enter when the candle is forming, there is a high chance that the candle can go down and become red and hit your stop loss. That is the con. What is the pro? Your stop loss is less. If you enter in a forming candle, your stop loss will be less, but your risk will be a bit higher. Again, if you let this candle close, you enter here, your stop loss will be bigger, but now you are more sure, you are more confident that okay, this uptrend is valid because the candle is closed above this point. Two types of entry, depends upon you how you take your entry. Let me show you this example in chart. Let me open any stock, whatever stock anyone wants to say, any stock you want to discuss, just tell me. Quickly tell me.
Kotak
Sorry?
Mahindra Bank. Kotak Mahindra Bank.
Okay.
Meanwhile, Akash, I see new participants here. Is there anybody who doesn't know what is stop loss itself? Can you please say? You don't know the term or you don't know what is stop loss?
Yeah, I'll come to that also.
Okay. Thank you.
Okay. Yeah. So Kotak Mahindra Bank, if I like randomly start taking points from anywhere, I'm talking about a uptrend, so I will just try to find out the uptrends. So here you see, this was our first part, this was our second part, and this was our third part, as per what we discussed. Okay. So when you see this first part, you let me crop it from here. I am not talking about how to capture this rally. It is not possible for you to capture each and every rally wherever you see in the chart. You have to only rely on your setup, and whenever your setup says that okay, now is the point to enter and exit, at that time you have to take your trade. It is not possible that every time you mint out money. Okay. So after this one, first part, this second part, we do not know yet if this is the real time situation. We yet do not know that it can happen that one more red candle is formed like this. We will only come to understand that this second part is complete when this is safe and a red candle has started to form upside. Then only we can say okay, this second part is now over. So right now we cannot say it is over or not. If someone is very risky, if he is very risky, he can enter here itself and keep his stop loss here. So he is speculating too much that okay, now he expects that the next candle will be a green candle. He is very sure, but this is not never recommended. So after this month, this was the next month here. So when this candle has started to form, this month is not completed. This is still I think maybe 10 or 15 days left in this month. These are monthly candles. So now we can say okay, first part, second part, and it looks like it's good, looking good. So here itself you can enter and you can keep your stop loss here. Why you should not keep your stop loss here, that I am going to discuss, which was the main motive. I just wanted to discuss some setup before starting the stop loss part. So someone can either enter here itself in the middle of the month, as you can see a good green candle, or he can wait for a closing, that let this candle close and then I'll take an entry. So you see the month has still not closed. Now I think it is closed, 1 or 2 days left for the month to close. So now it again looks a good entry here with a stop loss of here and now maybe here. We'll talk about this again. So both types of entry is possible. What you only need to see is that this pattern has to be stuck in your mind and you have to observe this pattern everywhere. Especially for investing, I am suggesting higher the time frame you go, better it is. So from yearly, half yearly, quarterly, monthly, the more higher time frame you analyze, the better your trades will be. So once you see this kind of a pattern, you can expect a good uptrend. Mostly. So let me go to the current scenario of Kotak Mahindra. If on this same pattern, if I want to take a trade, so it is somewhere here. Right now, it is here. If I try to find our first part, second part, and a third part, I cannot see a first part here. This is down. I want a first part upside. So at most, I can see here. Here was the first part, this one. This was a second, and this was a third. At some point of time, I'm talking at some point of time, this was also a structure. See, there is no wrong in this structure. If I cut it and if I see, if this was the real scenario, there is nothing wrong in this structure. This was the first part, second part, and from here you would have bought keeping your stop loss here, right? But what happened? Let me keep my stop loss here, 2 or 3 rupees below the point. What happened? This structure came down. But again, you see, your stop loss is still safe whenever you follow in this same pattern. Now again, this is my first part. If someone missed here, this is his first part. What do you expect after this? A second part you expect after this. These are all monthly candles. So first, second, and a third. Again, there is an entry here with a stop loss of here below the first part. Again, someone would have entered here. What happened? Again, it came down, and now it is somewhere here itself. So if someone would have entered here also or here also, he is still in this trade. He has not exited because his stop losses are here. He is waiting for this area to come. So overall, this is the first part. This is the second part. Third, yet to be done. The moment this becomes a green, again our structure becomes valid. Again our structure becomes valid. This structure is still valid as our stop loss is not hit. And again, this will also become valid. So everywhere or in any stock you go, be it banking stock or be it auto, anywhere, suppose let me open, say TVS Motor. Let me remove these drawings. And if we try to find the same structure somewhere, let me see if I can get something here. Cannot see. Let me go down to maybe quarterly. Okay, so in quarterly, if I try to see, here I can see something. Not exactly the same because this is the first, second, and the third. This is a very aggressive rally. I'll not consider this for an example. Maybe here I can take. This is also not a bad example. So after this one, if you take this as a first part and this one as the second part, obviously your stop loss will become very high. If you consider this whole momentum as a first, second part, you cannot keep such a big stop loss here, right? But the moment this candle is formed, this one is then enough stop loss. I'll come to that part. Let me just figure out. Yeah, okay, fine. Yeah, see, this one looks good. First part, second, third. So in this green candle itself will be your entry with this stop loss. Or if you want to be a bit more sure, you can enter here. Let me cut it so that you can understand it much more better. Say if this is the case, first, second, you don't know. Second, why you don't know? because it can happen that there can be 3-4 candles like this. What you know is that if it has to go up, there is always a if in your setup. If this has to go up, it will not break this point. From here itself, it will go up. So either it can be this, or it can be this, or it can simply go up. Any of the three possibilities possible in market. We cannot control that. What is in our control? In our control is that we know this structure. We know this is the first part. We will wait for the second, and the moment we see the third forming or looking a bit convincing, we will commit to the trade. That is what is only in our control. So as of now, yeah, here this has started to form. It can happen that it turns out to be a red later on. But again, everything is based on back testing. How much you have tested, how many stocks. Suppose for 100 stocks, you have back tested this same structure for 1,000 times. Excuse me. In this same time frame, then you know that when you tested 1,000 times, out of 1,000, 800 times that is in your favor. So until and unless you backtest yourself on any setup, you will never get that confidence that whether this will go up or it will become a red. So I have backtested and I know that okay, there is a very good chance that after this it will move from here. So here itself you can take an entry with this stop loss. That is how we keep our psychology. So now you guys can say that since this rally was already in the chart, it was very easy for you to explain. I agree on that. But again, the same logic applies. I will give you an upcoming one also from my watch list. So from my watch list, this is IOC. This is the current chart only. Nothing is cut. This is the real time chart of IOCL. What I can see, this was the first part, the second part, and this third part. So what we can expect, if we enter here, from here it should move. So ideally this has to be your stop loss. Maybe you can trail here also. So in your watch list, keep IOCL and see how this structure is forming, how it is going about. Okay, this is not from the back. I'm telling you to future test what will happen. Let me see if any other stocks. Let me check on Gale. Okay, this is already gone. Okay, I will come back to this with few more examples. Let me go back to my primary topic. We were about to talk about stop losses. So what is a stop loss? As everybody knows, this is a point where you are not going to sustain more losses from what you had planned. So say a stock is at 100 rupees. You expect this stock to move up, but it can happen either ways. So what if the stock goes moving downwards? You will incur a loss. So how much loss do you want to incur? Based upon that will be your stop loss. So say you want to incur a loss of maximum 20 rupees. You do not want to give more than 20 rupees loss on this. So your stop loss will be automatically 80 rupees. 80 rupees price of that stock. The moment the stock falls to 80 rupees, it falls to 80 rupees, you will simply exit and give that loss. That is your stop loss. There should not be a trade without a stop loss. Even if you are trading for 10 years perspective, that I am buying a stock for investment purpose and I want to keep it for 10 years, then also there has to be a stop loss. If you guys are trading without a stop loss, that is totally wrong. You should not. And if someone is advising you, do not keep stop losses for investing, then that is also wrong. I don't know on what basis they are saying, but that is wrong. There should not be any investment or trading without a proper stop loss. You should have a plan that at any point I am investing at any stock, what should be my target where I should get out, and what should be my stop loss where I should get out. This should not be a reason that this is a fundamentally very strong stock, a blue chip stock. Eventually, it will go up. I will invest and will become blind. After 8 years, I will open my trading account and see what is happening. If you are doing this in today's world, you are doing it wrong, because today's world has become very, very volatile, and today's world has become very dynamic. So in 1996, during Harshad Mehta and those times were different. There was not so many volatility. There was not so much of a knowledge bank available in the market. Like people like us, we would have very less scope to know and understand what is stock market. But now, see, we are having live classes, webinars, and everything. We also know many things about market and start to understand. So gone are those days that invest, become blind, and forget about the stock. 10 years later, it will give you so many rupees. Now dynamics have changed. Market has become very, very volatile. So with that, you have to adapt to the market. That is why stop losses are very important. Now comes the point that, okay, some people say HDFC Bank, it is a blue chip company. Eventually, it will go up. Buy on dips. Buy on dips. People recommend like this: buy on dips. That every time HDFC Bank falls 10 to 15%, it is a very good time to buy. Take it. But what is the actual logic behind this? Why do they say buy on dips? That is the same logic what we are discussing. HDFC has been in an uptrend always, most of the time, majorly uptrend. So what happens? Every time HDFC falls and this third part starts to become, people buy generally here and it again goes up. This is only that buy on dips, what people generally say normally. So if I go to HDFC Bank's chart, and if I go to yearly chart, this is an yearly chart. Every candle is one year. So you see, HDFC has been in a very, very big uptrend always. This was the COVID period. Still it recovered, I guess. No, this is not the COVID. Yeah, 2020. Yeah, 2020 was the COVID period. So it has been in an uptrend. If I go to half yearly or even in quarterly, every quarter, 3 months, all these candles are three month candle. Every time you will see there is a dip, buy on dips, people buy on dips, people buy. But the logic is same. Maybe here you would not have traded based on our setup. What is our setup? First part, second part, third part. That is our setup. So first part is an upside. So here I cannot see an upside. This is a downside. Maybe here you would not have traded in COVID period, but this looks good. After this first part, this is the second one, and this candle was the third one. So this was a good point of entry here, which is where the price is right now. So it is still in a very good zone. It's not a bad zone here. So overall, the basic concept lies the same. Why people follow the trend, why they say buy on dips, something like that. Here also there was a very good investment for small time frame. First, second, and this third one, here there would have been an entry and this would have been your profitable side. Guys, just give me 1 second. Sorry. Just
So while Akash is back,
sorry,
so I
guys.
see some.
Yeah, yes. HDFC Asset Management. You have to say something, Karthik ji? Please, you can. HDFC Asset Management. Okay, let me see. So you see HDFC Asset Management, if I go to an yearly chart, each candle is one year. This was my first part. My second part, third part has started to form. So now if you want to enter for an investment at 2535, logically, what should be your stop loss? Which means if you are trying to follow this pattern, you know, price, if it has to go up, it should not come below this. So here clearly you can see it should not come below this point or even this point. So if you want to make a good position in HDFC AMC at 2535 rupees, you should keep your stop loss at max 1250 for investment purpose. Again, you will say that stop loss is very big. 2500 is my entry and 1250 is my stop loss. So how much is this difference? Almost, I think 50% or so. Yeah, almost 50% is my stop loss. So you have to see that you are planning to take an entry on a higher time frame, on an yearly basis. So the higher time frame you go to take your entry, your stop losses will automatically become big and your targets will be also big. And your expectation of the achievement of the target will also become big, the time frame. So since this is an yearly time frame, if you invest here and you keep your stop losses here, so you have to wait for at least 1 year, 2 years to get a good return. 1, 2 years or 3 years to get a good return. If you want smaller returns for smaller time, you shift to a smaller time frame. Suppose from yearly I go to half yearly here. So in half yearly as of now I cannot see any uptrend what I can draw. This one at most what I can see is that this was my first part, second part, third part, it did not went up, it came down. Again I cannot see something like that. Let me go to quarterly. In quarterly also looks good only to me. If I infer to some other setups, it looks for a buying purpose only, but we will be confined to our setup only, what we are discussing right now. We'll look into that. So here, first part, second was very small, third is starting to go up, but does not look so much convincing. At least one or two more red candles, a bit deeper, and then maybe it should have been good. So why I am saying I don't want here, this is my personal preference, because as per my back testing experience, whatever I have back tested, I generally wait after so much, I wait at least for 30-40, at least 30% of a retracement. I wait. These aggressive ones I do not trade. This is my personal preference. I am not saying it is not good point to buy, but for me personally, this is not good. Had it been this candle also a red like this, somewhat a deeper second part, deeper, and then this third one, then I would have traded. So again, why this? You guys would have heard about Fibonacci retracements. People draw a retracement and Fibonacci. From where has this come? This has come from our naked eyes perspective only. I have never ever traded on Fibonacci. I have just read it on theoretical on your websites and some YouTubers talking about it, that it works very well, but I have never traded. But what I saw, the correlation was that based on my experience, I have seen that I generally trade when at least a deeper correction like this happens, and then this happens. If I try to draw a Fibonacci here, Fibonacci retracement, this is right. Something, how do they draw? Maybe from bottom point to top point, like this, no? Or actually, I don't know how to draw. Oh, yeah, right, like this, I think. So like this, they draw something, and then they say that this is 50%. 0.5 means 50%, 0.5. Yes. So they say when the price comes to this area, 0.5, and if it reverses from here, then you buy. These are the levels from where the price retraces, you need to buy based on Fibonacci retracement. This is what I think generally people teach. It is the same thing what I am discussing based on my naked eye and my backtesting experience, that I want a little bit of a deeper correction, and then when I see a green, that will be the point where I will buy. Something in the chat? This is where I get confusing. Not to worry, I'll clear up. Anything, it depends upon how much you can track and what is your expectation. Yes, exactly. So if I go to weekly, now you see where people get confused. If I go to monthly, please listen to this very carefully. If I go to monthly, what is my expectation? I want a little bit of a deeper correction. Let's assume 2200. Maybe the price comes down to 220, and from here if it tries to go up, then I will buy. This is a plan based on which time frame? On monthly time frame. Why? Because the monthly chart is showing me something like this. See, monthly chart is showing something different, and if I go to weekly, it is showing something different. So here is the point where you should understand what should be your expectation, what should be your plan. In expectation and plan, what does come? The target comes in, the stop losses comes in, and your time expectation comes in. What is the time frame in which you expect you will get your profits? In 1 day, in 1 year, or in 1 month, or eternity? What is your expectation? So if I am in monthly time frame, and if I am planning to trade or invest on monthly time frame, I have to automatically expect returns in monthly time frame only. It cannot happen that you plan your trade on monthly and the next day you expect a 10% rise. If you are lucky, it can happen for 1 day, but on a consistent basis, it will never happen. So on monthly, my expectation is that if it comes to 2200, and then if it tries to go up, then I will buy with my stop loss at maybe here or maybe below this swing itself. Which one to choose? I will come to that. Right now, it's a maybe this one or maybe this one. Say this is a red candle, and then a green starts to form. So I will enter here. See, ultimately, I am entering at this price only. If this becomes a red and then there is a green, ultimately I am entering at the same price. But what is my benefit? My benefit is that I am now more sure about this pattern. And another benefit is, if other things looks good, other things, what is this other thing? If the sector of this stock, HDFC Asset Management, it is a financial service stock. So what is this sector? Nifty Financial Services sector. So if at this moment this sector chart is looking good, so what happens when the sector is in your support? Even the worst stocks also start to run, because you are having a sector support, you have a sector sentiment. That is why people talk about sector. So it can happen that at this point, if the sector is looking good, I might not place my stop loss so below. This is a defensive stop loss, defensive. You are defensive, that your stop loss should be safe, and this will become an aggressive stop loss, that I am very aggressive on my trade. I have a very aggressive expectation that this is formed and here it should go up. Now it should not come below this, because sector is in support, everything is looking good at its place. So ultimately you are entering in the same price, but with more better, you can say, positivity. This was in monthly plan. If I go to weekly, now you see, where is my 2200 where I had planned? This is my 2200 price. See, 2200. So in monthly, what were we planning? Price should come down to 220, and then from here it should go up. In weekly, what we can see immediately, we can see It went up, a bit of consolidation, again trying to go up. Also inside that, you can see this. You can see a first part, a second part, and a third part. So here also you can say, if I zoom it like this, you can say it looks good. From here itself, you should move on. You should take trade here and keep your stop losses here. This is very aggressive. If I go to daily, in daily chart, how it is looking? See, it is looking like this. Now comes the real learning part. What is the real learning part? This was in daily, okay? Each candle is 1 day. What does daily candle show us? First part, second part, third part. Here there was an entry. And then it went up. So if someone would have entered here, his stop loss would have been below the first part, defensively or aggressively below this second part. And then he would be in a profit. The moment he did not exit here, he or she did not exit here, what happened? Price came down. So you have to understand, when the smaller the time frame becomes, say from quarterly you are coming down to monthly for trading, for weekly, for daily, the smaller the time frame becomes, the smaller your target becomes, and automatically the smaller your stop losses become. So while trading on small time frames, say hourly, daily, weekly, you should be very, very strict on your risk to reward. Suppose your stop loss is 2 rupees and you are getting a profit of 4 rupees. That is enough. You need to exit, because you are getting double the risk. Your risk is 2 rupees, you are getting 4 rupees profit. So if I try to mark here, suppose someone would have entered here after looking this pattern, and he would have kept his stop loss here, the safest one. So this was his stop loss, this much, and he got almost double here. So he should exit here then and there itself, because you are trading on a smaller time frame. You don't have that liberty to wait for long. So suppose someone exited here and price went up more, let it go. So if there is a train which is running from Chennai to Delhi and you want to get down at Vizag, will you travel to Delhi? No, your destination is Vizag only. Even if the train is going to Delhi, why would you go there? So you already know your destination is 1:2, risk to reward, when you are trading on smaller time frames. So the moment you get 1:2, that is enough. You just exit there. You do not wait. Also, lower time frame stop losses are weak compared to higher time stop losses. So suppose for a stock, you keep a stop loss here on daily. Let me mark this using a line. Say this is my stop loss based on daily. And suppose if I go to monthly and I mark my stop loss here. So at any point, your stop loss on monthly will be always stronger and always safer and always reliable compared to your stop loss marked on daily. Higher time frame stop losses are more safer and more reliable. This was the total thing that I wanted to explain. This was the motive of today's webinar, that when you are placing your stop losses, you have to understand everything, whether you are trading a stock or you are investing a stock. Again, be it trading or investing, what is your duration of the trade or investing that you want? Suppose you want to trade for only 1 hour, which means you want your trade to be over in 1 hour, either profit or stop loss in 1 hour, or you are trading for say 4 to 5 days positional trade. Similarly, for investing, either you are investing for 1 or 2 months or maybe 1 or 2 years. You have to be very clear about yourself that okay, on HDFC AMC, Based on the chart, you can make a checkbox. What kind of a checkbox? You can write the name of the stock, HDFC AMC. You can make columns, investing, trading. Here you can write time frame. So for investing, you can write here yearly. H means half yearly, yearly, monthly, daily. Now you can tick mark. HDFC AMC, is it looking good for trading in daily? Yes. Is it looking good for trading in monthly? No. As per the chart, what does the chart say in monthly? What does the chart say in daily? For investing, is it looking good on daily? Yes. Is it looking good on half yearly? Yes. On yearly? No. So based on this, you have to come to a conclusion. Conclusion will be, according to me, if you want to trade on HDFC AMC, the best chart I can see is on weekly. If you trade on weekly, it is giving you the best stop loss and the best time and the best target, looking good in weekly for trading. For investing, I don't think it is the good time for HDFC AMC. That is why, looking into the chart in each and every time frame, you have to come to a conclusion that this chart is good for what, either trading, investing, or for which time frame. So suppose I go to Coal India. If I go to daily, what is this? This is not Coal India. So if in daily someone says this is the daily chart, is it good for buying? I will say no. Why I will say no? Because price has already gone aggressively. Now what will you do buying? There is no point buying right now. Price has gone from 236 to 280, almost 30% gone upside, 20%, 30%. So in my checklist, what I will do? Trading on daily time frame, no, for Coal India. Let me see, in weekly, can I trade Coal India? In weekly also I cannot trade. No, because already price has gone up. Suppose after few weeks, something like this happens, a red candle, say another red candle, and then a good green candle. Then I can say Coal India in weekly, tick mark. Now I can trade because I can see the first part, the second part, the third part. Now maybe I can again trade on weekly. As of now in weekly, no. In monthly, what I can say? Opportunity for investing gone. Opportunity for investing in Coal India gone in monthly. Why? Because first part was there, somewhat a third part was there. When this candle was somewhere here itself, that was the point for investing in Coal India. Because the moment we come to monthly and quarterly, we are on a higher time frame. We look for investing opportunities. So say this candle was not there. Coal India looking like this as of now in monthly. So what we can say, if we say this is the first part, second part, third part, so this already somewhat broken a little bit. If this is the first part, second part did come down. It did come down. If you see this as the first part, second part did come down a bit. Now it is holding, but now we are not sure. The design or the beauty of the structure is not looking good. We are not convinced as of now that whether it is good or not. Now somewhat convinced, a little bit. Now we are more convinced that yes, now it is looking good. Here we were somewhat convinced. Any experienced trader would have entered here only, the previous one I saw, what we saw. Now it is looking good. So this was a good entry here itself for investing, 247. With your stop loss at 207 will be your safe stop loss, and this will be your aggressive stop loss, whatever you prefer. And then it looks good. So the monthly opportunity gone. If someone says, do you want to invest now in Coal India? Personally, I will say no. Opportunity gone as of now. In quarterly already price gone, no point. Now these are the higher prices. See, what is the problem with us? I'm deviating from the topic for 2 minutes. There are two kind of prices. One is retail prices and one is wholesale prices. You guys can relate this to real life. When you go to a retail store to buy anything, you get at retail prices. You go to buy a coconut oil, you will get at 100 rupees per bottle. The moment you go to the manufacturer, you will get at wholesale prices. This 100 will come down to say 70 rupees. That manufacturer will sell you at wholesale prices. So the big people, they try to buy at wholesale prices. And we are the fools. We try to buy at retail price when the price goes up. So this is a very high price. This is a retail price, 282 rupees, where we are trying to buy. What was the wholesale price? These were the wholesale prices, 180, 200. These were the prices where the big people have already bought. So we never try to capture those price. Why we never try to capture those price? Simply because if a stock is looking like this, what we see is that it is in a downtrend. How can this stock become an uptrend?
Hello.
Yes.
Andy.
Oh, someone is
Eric?
in call.
Mhm.
So, so when the price is in downtrend, until and unless we are able to see it is in an uptrend, how will we understand that this is in an uptrend? We have to wait for few candles to form.
Akash, can you please mute Poonam?
Sure. Yes. How to?
Then go to participants and
I think he's
place
muted.
the cursor.
No.
No.
Yeah. Muting you, Poonam. Okay.
Yeah, now it's fine. Please go ahead. Sorry.
So when you look in this chart, it is still in a downtrend. For us as a retailer, we need a confirmation. We need something to see in front of our eyes to understand that yes, it is in an uptrend. So these are quarterly. Each candle is of one quarter. 3 months quarter. See. So after this is the current price only. So after this whole thing, now we small traders will be convinced that yes, this downtrend is finished. Now it is looking good, and now we will try to buy Coal India. That is the only you can say shortcoming or drawback of us. We cannot say. And the moment we buy here, thinking that this is enough, price will go down more. This happens. This happens in Yes Bank. This has happened in many stocks. That price is coming down. You have thinking that okay, price is down 50-60%. Now this will not go more below, and we buy, and it goes more below. So for this only, we need to understand the charts. We need to understand what are the candles telling to us. So if I go to these areas, somewhere here in these areas, and if I try to see if these areas give me something to buy or not. Yep. See, I'm making it a bit shorter to fit the whole thing in this screen. If you just see an overview, do not see any price, because I'm trying to fit this in a screen. Yep, like this. When this downtrend was there, this kind of a sideways area you cannot find in any of this downtrend. See, here was a sideways phase. It was tilted downwards. Here was a side. This is also downtrend only. Here was a sideways phase tilted downwards. In this whole thing, from 2016 to 2020, only this was this sideways area which you can say is not tilted downwards. What is the meaning of tilted downwards? It is meaning that price is barely trying to hold itself, but still it is in a selling pressure. So this was the first signal where The big institution, I'm not talking about us, the big institution would have understood that the selling pressure has decreased. After this, they bought, due to which price did gave a good breakout. Here also we cannot do anything. We still cannot do anything. From where we can do, this was the point from where we would have done our part. Why? Because after such a downtrend and after such a sideways momentum, and after this one, again the if the price would have gone down from here itself, it would have broken this area. But what happened? It went up to the same level, came down. From here, it started to form your price action. The first part, second part, third part. From here it started. So this was itself the perfect time, 190, 200 rupees for our investing. When we would know how to analyze and read the chart, that would have been a very good thing. I will give you a future product that you can track. I have traded this myself also. You can see this. This is my only analysis. I traded this for intraday basis. I did not carry forward. This is Tata Consumer. I entered somewhere here only in this candle, and here only I exited. Right now it is looking good only for investing. If I go to yearly in Tata Consumer, okay, one more point you need to always observe. After every big candle, there are few small candles, and then when again starts to go up, you can expect a big candle. It can be on the either side. See, it can be like this also. Suppose there is a red candle and there are few small candles like this. This is, you can relate this to a simple logic, that if you are cycling at a very high speed, not bike, if you're cycling on a very high speed, you get exhausted, you take a pause for some time, and then again you resume your fast cycling. You can relate this to this simply. So after a big movement, I'm sorry, this is wrong. Like this. So after a fall, there are small candles. You can expect that the next candle will be a big one. Now a green or a red, that again depends upon your analysis, because as per here what we can see, the first part, the second part, and there is a high probability a big red candle can be formed. This one, if you are proven wrong, a green candle will like this will be formed, but a big candle will be there. Anywhere if you see, this logic applies in any time frame. This is 75-minute time frame, 7575. 7575. If you see here, let me zoom in. You can pick a candle from any point. Suppose I'm picking from here. A big red candle, small candles, a big green candle compared to this. Big green candle, all small candles, big one. So now what you can again expect, you see a big green candle compared to this, all these are very small candles. So very soon, say on Monday or Tuesday, you can again expect a very big candle. So it can be either a big green again or a big red below. That how we can analyze. If I go to say, okay, let's analyze from the yearly. If in yearly you see here, so this was the first part, second part, third part, when this was breaking here, there was a good investment opportunity. This was in 2017. Okay, gone. After that, first, second, third, here there was an investment opportunity, gone, 2020. So here I cannot see a first, second, or a third part. All I can see is this. There is no second part, no red candle. and no third part. So will we suggest someone to buy Tata Consumer on yearly basis? No. Based on yearly, we will not suggest, because our setup does not allow us to trade. Our setup says first part, second part. So where is the second part? If I take this whole as the first part, I cannot see a second part like this. So on yearly, we cannot trade. Let's go to half yearly. Half yearly is looking good, somewhat looking good. First, second, and third is starting. So in half yearly, maybe we can invest. Half yearly, it is looking good only. If we buy here, we can keep our stop loss here. We should not go so much below. Why we should not go so much below? Because firstly, it is illogical. It is illogical to buy at 853 and keep a stop loss at 300. It is illogical, number one. Secondly, since this stop loss is on a half yearly basis, it is a strong stop loss. Half yearly is a very big time frame. So bigger time frame stop losses are safe. So from here, if it has to move again, and if it has to move up from here only, it will go up. This will be safe. 650 looking safe. On half yearly, yes, we will suggest people you can invest based on half yearly, but again your target will be also based on half yearly. Maybe you can expect your returns in another 6 months, or maybe 2-3 more half yearlies, and then you can expect your target. Let me close down. Let me go to quarterly. In quarterly, it is looking very, very good. First part, if I go from below, first part, second part, and this green was the third part. Let me cut it, then you will be looking better. Okay, if you see like this is in quarterly. All this was the first part, the second part, third we are not seeing. Okay, you can say this as also a third. This one also you can say a third, because it was coming down only and that went up. Eventually, here you will find it very attractive. First, second, and third. So you can buy here. Your stop loss will be this, not this, this. So if someone would have bought at 790 with a stop loss at 650 on quarterly basis, what happened next? This happened, this happened, this happened, and now we are here itself. So that trade, that investment is also safe only. What we took few quarters back, and in this quarter also it is looking good. Let me go to monthly. So in monthly, what we can see here is that first was there, second was there, third was here. This third, if someone would have traded here, now you see why I said defensive and aggressive. Suppose these candles were not there. So first, second, third, here was the entry. People who would have kept his stop loss here, their stop loss would have been hit. They would have exited, given the loss. And people who would have kept their stop losses here, that was also almost hit. They would have also exited. So the moment we came down from half yearly to monthly, our stop losses become weak for investment. That is fine. This can happen. We cannot avoid, we cannot be 100% correct every time. That is why I said this week is looking a better, safer stop loss. So you can again ask why you are telling that this first part is not safe and this is safe. This is all by experience. I have seen in my experience that whenever stop losses is placed below wicks, that is a bit more better. So I am placing my stop loss at 680 and this wick is near 640. So only 40 rupees. So not a problem for me. I can take 40 rupees more and I can keep a safer stop loss here. That is fine for me. So on monthly, what I can see, first part, second, starting to fall. So it can happen that one more month like this and then it can go up like this. So on monthly, can we trade on our setup? No. Our setup is showing only the first part, second is still forming. On monthly we cannot trade, but on half yearly it is looking good. So on half yearly our setup is there, first, second, third, with a stop loss of 650. Half yearly it is looking okay. In monthly it is not looking okay. In monthly maybe like this, and then we can go. So what are the pros and cons? In monthly our SL will become small, stop loss. If it comes here and if it goes like this, maybe we can place our stop losses here itself, 720 or 680. We will not require to go so much below, because once this is there in the highest level, it is okay to keep it here, not now. In weekly what it is showing, in weekly it is showing there was an opportunity here itself, first, second, third, here was an opportunity which is gone. Small targets. Now as we go to these smaller time frames, our target becomes small. So if you take this as a first, second, third part, you enter here, this is a very big stop loss. You can keep here, not to worry, you will get 1:1 only. If you keep it aggressively, then also you get your target. You simply exit the moment you get your target. Now what we can expect in weekly? First part, or you can take this whole as a first part. Second part, if you see a green here, third part, again you can trade for a small stop loss on weekly, for a weekly target. Weekly target, weekly stop losses, small targets, 1:2. In daily what we can see? Something like this. Already first gone, second is there, third I cannot see. In daily I cannot figure out anything as of now. So we had cut this, right? Let me go back to monthly. Is this the real part? No. Yeah, right now we are here. Right now we are here. So here it looks okay. First, second, third is starting to become. This is the September month. Still so many days left in September. It might happen it becomes a red. So now here there is two approach, aggressive or defensive. If you want to make a position here for investing, defensive stop loss is here only, because we do not know what will become of this candle. Either it can become red and the next month it becomes a green, or this candle itself will go up. So this is defensive and this is aggressive stop loss. Aggressive means this one, 820. Like you are very, very aggressive on your approach. That first part there, second part there, third part, it was trying to go up. Maybe it was stopped due to this, it stopped. But the moment this candle becomes red, I will exit. This is my logic. I am very, very aggressive. The moment this candle becomes red, I will exit. I am speculating this candle itself to become a green. There are two kind of approaches. Now if I go to weekly or daily, so I see something like this in daily here. So daily it is looking like this. There is a rally base and a rally, there is a demand zone. Most probably on Monday or Tuesday, keep IOCL, I told, keep this in your watch list. Tata Consumer also. Most probably this area 840, 850 to 836, it will come and then it will go up. As far as my analysis is there, it will go up. So do not sell your home and invest everything based on what I said. At least try to observe it, or even if you want to trade in a small quantity just to see what is happening. So in daily also, first part, second part, let the third part form. At least for Monday or Tuesday, wait for one green candle to form, and then the picture will be more clear to you. As far as I can see, this area is looking good. This is off topic. Why off topic? Because we have not discussed about these structures as of now. Yeah, this area is looking good, 850 to 837. Most probably I am expecting a reversal from here itself, 837 for a smaller target, because it is at its all-time high. You have to see the selling pressure also. What is the selling pressure from the top? So I cannot see any selling pressure. It is at its all-time high. There is nothing to stop. This was there already tested once and twice. So in upcoming 1 or 2 weeks, you can see Tata Consumer maybe blasting off towards 900, 940, 950 if everything is okay. Now, what about this sector? I will take last 2 minutes and then I will wrap up. What about this sector? Tata Consumer is FMCG sector, right? FMCG. So if you see the FMCG sector here, if I go to monthly, what do you see in monthly in FMCG sector? First part, second, third, it is trying to make. So this sector itself is trying to make a third part in monthly. In weekly also, looking good only, not that bad. Cannot see that first, second, third, but some halt in the price I am seeing. If this candle was not there, if there was this candle at like this red, then I would have doubted. But this candle looks good for now. In daily, what we can see? In daily, slow and steady from here trying to reverse. First part, second part, third is not that prominent. A little bit more green would have been prominent, first, second, third, but looks okayish. How about some smaller time frames? In smaller, not looking that good. See this green candle. And then you see this. Okay. Now go back to Tata Consumer. You see this green candle and you see this. Now you understand why sector support is very important. When the sector supports you, stocks will run like anything. And when the sector is against you, how much beautiful is the pattern doesn't matter. The stock will not run. How much worse is the pattern? So this was all about stop losses. The takeaway from our discussion is mainly is that stop losses on higher time frame are more safer, more reliable. Stop losses can be of two types, either defensive one or an aggressive one. It depends upon your plan of trading. If you think that the candle will go up from here itself, the moment it turns to red, you will exit. Keep an aggressive stop loss. If you are investing over 3 to 4 months on a higher time frame, say monthly or quarterly, keep defensive stop losses. And the most, do not try to, what should I say? Do not try to exploit your stop loss. Do not try to exploit it. By exploitation, I mean, if I go to weekly here, and if my chart is suggesting that my stop loss ideally should be at this point, suppose, or maybe below this wick. If my stop loss is here, if the chart is suggesting, you should not try to exploit it and purposefully, forcefully shift it to somewhere else. That is called exploitation. So suppose you wanted to buy 100 quantity here, and your stop loss is say 50 rupees. So overall 5,000 rupees loss you are ready to bear. Now to reduce this loss, you are purposefully shifting your stop losses from here to here so that your losses is reduced. That is wrong. Your stop loss should not shift. Instead, reduce your quantity from 100 to 50 to compensate for that. If you want to reduce your risk, do not compromise with your stop losses. Try to analyze the whatever has been discussed here, this pattern on different time frames. If that much also, if you are able to practice, at least I do not ask much from you guys. You guys are job goers and other you guys have work also, at least in a day 30 minutes, that much you can give for your chart in the evening. In 1 hour we discussed so much, 30 minutes is enough to analyze 2 or 3 charts. Whatever we have discussed here, that is enough for you to earn. You don't even need advanced setups. Even if this much you follow and backtest, you will yourself know what is the point which is looking good for investment and what is the point which is not looking good for investment. But that commitment is needed. If you are not committed, then there is no point. Say 1 or 2 trades you took, SL was hit and you left it. You said that okay, now I won't trade, or this setup is not good. That is not right. You have to give time. So this one, if you see sequence sciences, you see in monthly or maybe in quarterly also. If I go quarterly, not that much good. In monthly, it's looking a bit okayish for me. I have discussed this with few more guys also. A good downtrend from here, you see, starting to make an uptrend. So from here, first part, second part, third is not there. But you have to see one more thing. If you draw a vertical line of downtrend from the top to the bottom, this was the downtrend, length of the downtrend. At least 40 to 50% of this length has to be a sideways market to give you a big upside again. So if this was the duration of the downtrend, so here the downtrend is looking to be closed. So at least this much of a sideways, you see, this is the full length. If I make it into half, at least this much of a sideways is a favorable for one. I am not saying that it will not go up. It can happen from here, it can go up. But this is not favorable for us. Generally, what we should look for investing purpose, what we should look is, if a stock was in a downtrend for such a duration, at least 30 to 40% of sideways, let it go, 30 to 40%. And then when you see that it is trying to make an uptrend, that would be the point where you will get the best momentum. And the best example is Tech Mahindra. For now, you see, I have my levels also marked here, Tech Mahindra. If you see the downtrend duration, this was the downtrend duration, this much. And almost equivalent sideways momentum also. Now Tech Mahindra is looking good for an investment purpose for an upside. So now this was in a higher time frame. In each lower time frame, whenever you find that same pattern, it can be tradable. First part, second part, third part. Here itself was the entry with an aggressive stop loss. Why an aggressive stop loss? Because in higher time frame, it has given clear-cut indication that now it is ready to blast off. So now even if I keep an aggressive stop loss, there are high chances it will go in my favor. You have to understand the importance of higher time frames. So here in daily, first, second, third, looking good. If you want to make a small trade for a small target, so on Monday, if you get any price, if it is gap up, then nothing can be done. Say if it is flat or if it opens somewhere here on Monday, you can easily buy and keep a stop loss here near 1240. Keep your stop loss near 1240 and 1260, 1255. Even if it is in a red, say on Monday it is in a red, buy at the red itself. Keep your stop loss here. Why? Because we are very aggressive on this stock. Because on higher time frame, it is showing that it is ready to blast. On weekly also looking good. So there is high chance in daily that this will be saved. And from here itself, it will move. Trade in only one quantity. Do not take 1,000 quantity. Trade only in one quantity. But at least try to see what is happening. I gave you IOC, I gave you Tech Mahindra, and one more I gave you, I forgot, whatever it is. A Tata Consumer. Keep a look at those stocks. How it is behaving, what it is trying to do. Okay. And if there is any doubt, we will clear those things also. So I am done for now. If you guys have any doubts, please. The stop loss for Polycab India is on 6-month time frame. Stop loss is 2811. Let me see. Half yearly time frame you are telling. Meanwhile, if you guys have any question, please feel free to ask. Polycab India, half yearly. You're talking about half yearly, right? 6 months. This is half yearly. 2811 you were saying. 2811
Yes,
is
sir.
2811 is somewhere here. No, see, in half yearly, if I go, where is this pattern? I can see this is the pattern. So stop loss is not here. Ideally, logically, your stop loss would have been here somewhere in half yearly, because 2811 here, I cannot see any swing or anything. This pattern. So in
Okay.
half yearly, not that much. Yes, if I go to quarterly, then also I cannot see any stop loss there, because this is the first part, second part, third part. Even if I'm aggressive, this will be my stop losses, 2000 or 1750. I cannot keep stop losses below this green candle. That is not logical. If I go in monthly, then in monthly, if I see, yes, in monthly, your stop loss is valid. You were talking about here, I think, 28 somewhere. Because this is the first, second, and third. So the opportunity is gone. Your opportunity was here itself for buying 3200. Because the moment this was the first, second, and third part, this was the area where you should have bought using this as stop losses. So now if someone is planning to invest in Polycab, that is not good. For investment purpose, that is not good. You will buy again at a retail price, at a very high price. So what you do, you try to pick stocks in monthly or quarterly time frame. In monthly and quarterly, you try to pick stocks which are making these kind of pattern, which are at this point. Say if there is any stock which is looking like this in monthly or quarterly, if any stock is looking like this, and then you try to invest, you will see you will get very good returns. Your accuracy will also be very good. Okay.
Okay. Thank you.
Any more questions, guys? Any doubts, any questions? And not to worry, in upcoming sessions also, these same thing will be like refined and repeated over and over again, so that the revision is also there. For now, I'm done.
Yeah. Thank you very much, Akash. You can stop recording probably.
Yeah, sure. Where's the option?
So guys, if you have missed any previous sessions, it will be available